Hello everyone, I'm Hasu, Marketing Manager at Bybit Vietnam, and today I'm thrilled to welcome you to our session, Unlocking Institutional Liquidity in Southeast Asia, Custody, Capital and Compliance. So today we will explore what really driving and holding back institutional adoption of crypto in our region and what needs to happen next to unlock its full potential. And here on stage, we have three incredible speakers. And please welcome with us Mr. Aldwin, APAC Sales and Business Development at BitGo. Before we dive in, can you introduce a little bit about yourself?
Yep, thank you, Hasu. So I'm Aldwin. I take care of the emerging markets in BitGo, Vietnam included, Thailand, Philippines, Malaysia, and also some part of Central Asia. Just a brief introduction of BitGo. We are currently the largest independent custodian in the world of around 120 billion of crypto assets with us, of which 50 billion is staked. So we do have quite a lot of institutions using us, ranging from exchanges to VCs to family offices.
Yes, thank you for being here. And please welcome Mr. Taka, Head of APAC at Ledger.
Thank you very much for your audience. Thank you for also sticking around to the very end of this panel discussion. My name is Taka. I head APAC for Ledger, and I also globally lead the blockchain integrations and go-to-market strategy for the whole business. So as you know, Ledger is a hardware wallet. It started off 10 years ago creating these hardware devices. And now we have a consumer app, which is called Ledger Live, and we also have an enterprise solution. And currently, for the retail wallets, we secure about 25% of the crypto market cap. We sold 7-8 million devices. So we're still growing it. We have new devices out coming this year as well. Hope to announce this very soon. And yeah, I'm very looking forward to speaking to everybody here.
Yeah, and please welcome Mr. Wong, the Client Solutions Director at Ceffu.
Hi everyone, I'm Sean. I'm the Client Solutions Director for Ceffu. Ceffu is a crypto custodian that was one of many successful initiatives that was born out of the Binance ecosystem in 2021. In 2022, we became a totally separate and independent entity from the exchange itself. And we've been experiencing incredible growth since then, working alongside some of the other custodians within the space. For those that have never heard of Ceffu before, we're spelled CEFFU. The pronunciation is same as SAFU, Ceffu. So your funds are safe with Ceffu.
Yes, and we believe that with three incredible speakers, we will have a very deep insights about our topic today. So now let's move to our topic. So the first question, please, for Aldwin. So over the last 12 to 18 months, how has institutional demand for crypto in Southeast Asia evolved, and what's driving that shift?
Yeah, over the last 12 to 18 months, institution adoption has certainly grown. I think from our point of view, just the last month alone, there were 6 to 7 different listed companies holding crypto as treasury. And it's not just Bitcoin, right? You're thinking of Sui, Solana, and other AI tokens where they deploy into treasury. And what BitGo do to help them is through our OTC desk, would help them to purchase it, custody it, stake it, all in one platform. So that's what I've been seeing the last 2 to 3 months. But if you take a look back the last 7 months, there are family offices and some sovereign wealth funds already deploying into crypto, whether it's on the news or what.
So how about Taka? Do you think about this?
Yeah, sure. Obviously all those treasury companies obviously is something very new to this industry. But if you think about other institutions, I used to work in in a hedge fund before, and previously from Ledger, I used to work at Copper, which is also another crypto custodian. A lot of hedge funds and high frequency trading firms were onboarding into crypto. So that's been probably the first movers into crypto, and that's the kind of largest segment that we see today. Then other than that, I'm starting to see a lot of banks, trying to adopt stablecoin. Obviously, you see in Hong Kong, they were trying to launch stable coins, and I think other countries will follow suit. And lastly, I would say that a lot of gaming companies are also coming into the space from traditional markets as well. So if you look across a lot, I mean, I think those are the three large segments that I've seen over the past years adopting crypto.
So how about Sean? Do you agree with that views of Taka and also Aldwin?
Yeah, 100%. I mean, we're working with some of the treasury companies right now. But again, looking back in the past 8 to 12 months, I think from a global scale, there's the launch of ETFs, there's RWAs, and there's a lot of other things that are happening. The Trump effect, for example, has kind of opened the floodgates for crypto, right? That's a really exciting time for us. From a local perspective in Southeast Asia, I think, when I look at homegrown crypto startups like Coin98, I think you guys have been doing an amazing job, advocating for crypto adoption at all different levels. Looking at the conference today, I know in the morning you guys had a lot of, that's the presence of the government officials, a lot of large industry players that were attending these conferences. So that really highlights the importance of what you guys are doing. Really incredible stuff. Yeah, kudos to Coin98, whoever you guys are, wherever you guys are. Yeah.
So back to Taka. So maybe from the perspective, do you think what types of institutions are leading this adoption wave in 2025, and what expectations are they bringing it to comes to institutional grade services like custody?
Yeah, I think the main one, I mean, obviously the recent one are these treasury companies, right? And I think in Asia, Hong Kong listed an ETF. If you remember, like a year ago, it was an absolute flop. And I just didn't really see that much institutional flow going into it, to be honest. And I think this treasury strategy obviously does make the news and sounds really interesting. But to me, like, I just don't really see that much value in it, right, as a company. I mean, if you really wanted to buy crypto, you just buy the crypto. If you want to lever it up, you can do it anywhere. There's no point of buying a treasury company with the company has absolutely no business at all, and then you're just kind of pumping up the shareholder value. So to me, that institutional adoption is not really sustainable, and obviously it kind of helps you guys drive that custody business, which is great, and then they'll stake and all that. I think that's really great, but I wouldn't say that's like a healthy adoption of crypto. I think the more stability will come from stable coins, RWA. That's kind of more the real institutional things that I see. And particularly in the previous panel, we were talking about stablecoins, so I won't talk about that. But on the RWA side, for me, the biggest the use case for it is to bring the public securities onto blockchain. We've been experimenting a lot with like private credits, private equity, et cetera. But even in the traditional world, those are private because they want to remain private. They don't have a very big issuance, and they just want to sell it to their own preferred clients, and then it just remains so. But the real use case is that when you bring public securities onto blockchain, whether or not be 24/7, I can't really say so. Maybe they do want to take a break and not want to work on the weekends, I would say. But I think that when that's the real use case, the public securities being on blockchains, that's all traceable. A lot of the back end admin for holding securities, whether it be distributing yield or dividends, et cetera, they can all be automated by like smart contracts. So you could reduce the amount of admin work or the back office work as well. So I think that'll be like the kind of real use case that I would like to see, and I'm sure that it's going to happen.
Yes. So it's clear that adoption is growing over the world, but every market has its frictions. So let's talk about what's still holding things back. So how about Sean? In the view, what is the single most critical barrier preventing institutions from deploying capital at scale, and how can we overcome it?
I think we all still have to remember that blockchain technology is still new. I mean, it's been in the space for more than a decade now. It is still new, as it's still not a technology that is fully understood by traditional institutional player. And I'll take an example, right? Like the concept of fractional banking has existed in the space for more than 100 years. And it's not a concept that is easily understood by an average person. Now, when we look at blockchain technology and its value drivers are also not fully understood by the top decision makers within the country, right? So where we need to come, I mean, banks are really good for, so taking the banks, for example, they're really good to make money within the fractional banking system. They take a part of that deposit, they put it in reserve, they lend the rest out, and then they multiply that liquidity and make a whole lot of money along in that process. Now, but if you take blockchain into the picture, I think banks are struggling to find a way to replicate that success. So I think that's where we come in. Players like us, we come in. We need to be able to present them, give them education on how the technology works. We need to give them real-world use cases, and more importantly, present them with clear revenue models where they can actually leverage on these technology to generate returns at scale and not just use these tokens just for a store in value.
Also, I wanted to back to Aldwin and also Taka from the view, like the common view that one of the biggest barriers is friction between banks and crypto. So limited fiat on-off ramps and inconsistent support from local banks. So do you guys agree with this?
Yeah, totally agree with it, right? Like in Vietnam, for example, capital control is super tight. That's why I think you can see a lot of the players coming to GM Vietnam and Conviction this year. One of the reasons is you guys said that banks might be open to opening their own exchange, but with a very high capital requirement, right? So that obviously caught the eyes of global exchanges' attention. What the custodian can do, right, is for BitGo, we chose the path of being heavily licensed. So in US, there's a term called qualified custodian. So it's BitGo, Coinbase, and of course Anchorage, right, with their banking license. How we can sort of bridge the gap is that because we are licensed, right, we sort of can allow our clients through us to also do some kind of on-off-ramp services. Of course, it's not as blatant as having a bank account. But if you're KYC'd by us, you're a licensed fund, you're a licensed VC, you're using BitGo, yeah, sure, you can transfer your crypto in, and if you want to send fiat out to, let's say, your LPs, we can, of course, facilitate that for you, regardless of whatever regions you are. So I see ourselves as becoming sort of a small bridge for that.
So as our Bybit also.
I think if I take the example of all those trading firms and hedge funds that came into this industry, whether or not they were regulated or not in this industry, they saw money, they smell money, and they come into it. And they'll jump through hoops to make sure that they can make money, right? And I just don't see that for the other institutions just yet. I don't think it's about the infrastructure, or it's not about on and off ramps. It's that where can they actually make money in this world? And then also, and there's also this kind of psychological distrust of the industry as well. As you know, like a lot of the traditional businesses only rely on people who they know, in their own kind of like world of people in the industry, right? We are complete outsiders, like absolute outsiders. They don't trust us to begin with. To them, we're like not, the people who actually they interact with on a day-to-day basis. Therefore, there's a huge psychological barrier to say, okay, I'm going to work with these guys with t-shirts and shorts. It's just not really going to happen that quickly, right? And I think some maturity of this industry needs to happen, and we become more like they're adults to be able to work with them in a similar kind of fashion.
So now we're seeing that there's still like the gap between the bank and so the local. And so what exactly will unlock the next wave of liquidity? So maybe, please, Aldwin, please share something like, we are seeing that a growing disconnect between East and West in the institutional capital flows. So what's playing the biggest role in bridging this gap, and what's still missing?
Yeah, I think bringing liquidity, right? Like what Taka mentioned earlier regarding the tokenized RWA. So we have seen like projects like Plume bringing tokenized funds on chain. I see that kind of growing in the future as well. We have seen a few banks participated, like I think UBS last year launched their UMIN token. So a lot of money market funds are coming into play. How can we bridge the gap between East and West? I don't know. For BitGo, we do have, I think now around 3,000 to 4,000 institutional clients with us, a lot of which are primarily in the US, but we have seen a growing number in Asia as well. So we do have something called the Go network to facilitate these kind of institutional flows. So it's like an internal ledger whereby if you are seated in I don't know, in Thailand and your counterpart is in the US, you don't trust each other, but you're both our clients, you can actually just swap the funds directly internally. And I think Ledger is also building something like that, right? The Ledger Prime, is it?
No, we're not. It's okay. I think the bridge between that is more political than anything else, right? In the West, obviously capital can flow from one country to another. There's no barriers. But if you look across Asia, there are countries with a lot of like cross-border capital controls, and obviously there are some that don't. And the last thing that they want to see is people, selling their currency and buying something else. And I think that's the thing that fears them the most because, it's, for a lot of us here, maybe it might be, something new, but for a lot of people in the older generation, the Asian financial crisis is not so distant memory, right? And when you have, if you have weak financial controls over cross-border remittances and payments and et cetera, that's going to be fragile for your economy. So I think the problem is not really about crypto or the supply of what kind of like products we have. It has nothing to do with that. I think it's more on a political level. How can they control the balance of their currency?
I wanna add on to that as well. I think I agree with what you guys just mentioned because my opinion on this is that there's always going to be preference for institutions to park funds in the West, right? US or EU. There's many reasons for that. It's not a crypto problem. It's just more of a capital allocation preference, right? It's been like that for many, many years now, and I don't think that's going to change anytime soon. But what I think institutions or banks and relevant parties in the Southeast Asian market can do is build upon what they already have and leverage on partners like us who actually have the technology and all the expertise to actually facilitate that and make the whole process a lot easier. If you look at China, for example, 20 years ago, China's government policies lifted millions out of poverty, and millionaires were generated in the process of that. And a lot of these millionaires are parking funds in the US. They're investing in startups in San Francisco and stuff like that. But at the end of the day, they're bringing these money back. They're making the country more prosperous. The question is, how do we ensure the fund flow back to West to East is actually going to be a lot easier, a lot seamless? And yeah, you know what? The Go network is amazing. I study it extensively, and I know it's an instantaneous process. So we're watching it as well. We're watching that space, and I'm hoping that regulatory bodies, banks, as well as all the institutions in the region are also going to be paying attention to how they can make this whole process a lot easier.
That is what you shared. That is exactly what we're gonna to ask you in the next question. Like, okay, what we can do like to unlock the massive liquidity in C and from the sharing from the Sean. So how about Taka and Aldwin? Do you think any methods to unlock?
Sorry, can you repeat that question?
Do you think what we can do to unlock the massive liquidity in C as year?
I kind of answered that already. I feel like, I think it is generally the liquidity issue comes from more openness of the financial system, right? And I think that's what's really necessary to unlock capital. If you look at any capitalistic country, there's a lot of liquidity there. Just look at the U.S. I mean, it's not just because of their GDP is big, but they have extremely, open capitalist system. And that's why people want to allocate there. That's why people migrate into that company to, get jobs. And then a lot of things are created there. So that financial freedom is what unlocks liquidity. And I think in Asia, we're still kind of on that path. Every country has a different path, and then, the beginnings are a little bit different. But I think if we all can kind of move towards that direction, then that's when the real liquidity unlocks.
Yeah, for me it's the same as well. Like in Vietnam, one of the highest crypto adoption rates without a centralized exchange license right here. So a lot of liquidity is in DeFi, a lot of huge DeFi trading volumes here. First step maybe is regulatory clarity. So we have seen that countries like Singapore, Dubai, where they have a strong regulation framework that come out and everyone follows it. Yeah, then all the institutions would start coming in, and they won't be afraid of getting punished, right? So I think this would be the path that Vietnam seems to be going these few years, which is very good.
We should open to learn and also to see how other countries they are doing, right? So maybe back to Taka. So what your ideas instrument look similar, or could you take a completely different approach for this?
Sorry, I forgot.
So like what your idea instrument look similar, or would you take a completely different approach from others insights, or you agree with Aldwin?
Yeah, I generally agree.
Yeah. So you also mentioned about ETF before. So Ethereum ETF with embedded staking yield making wave. So how do you see them influencing capital allocation strategies, especially as TPU years start to decline?
So I think that's really kind of depends on how institutions want to go into this space. Obviously, a lot of the institutions do not want to touch directly crypto. So they would choose like an ETF, but we haven't really seen that yet in this region, right? Not because it hasn't been listed, but it's just there's not much traction to it because I don't think that the institutions are ready to come into crypto yet. But if they were to do so, and this is very hypothetical, they don't want to onboard to different custodians and then onboard to an exchange, this and that. I think what they want to do is just buy an ETF. And if it has some yield, obviously that's great. But I think the least kind of resistance into crypto is ETFs. And I think if it's whether it's yield bearing or not, it doesn't really matter because if you're only paying like 50 bips for buying an ETF that solves all the infrastructural problems for you, then why not, right? Because then it's much easier. So I think that's the kind of gateway into crypto for them.
So maybe we will ask Aldwin here. So are your institutional clients actively looking at these products or still in the wave and see phase?
Yeah, sorry. For me, there are like two schools of thoughts, right? There are some family offices that come to me and say, yeah, I want to allocate into crypto. And then after giving them the whole pitch, 2 months later, they just go and buy an ETF. And there's another bunch of family offices and high net worth individuals where they straight off the bat, they just tell me, I don't want ETFs, I want the actual coins, I want to hold the actual tokens. And then that's where they then source for a licensed custodian. And then they would do staking, they would do borrow lending and all the funky stuff. So it really depends on the risk tolerance of every individual. But from the ETF point of view, right, like the correlation coefficient for ETH and BTC ETF compared to all the tech stocks, it's still currently like around 0.7, 0.8. So still tracked quite similarly. So I don't see it as a diversification kind of portfolio for many of the asset managers out there. But it'll be interesting to see maybe Solana, Ethereum, and other sort of crypto ETFs popping up with liquid staking even.
So to wrap up this session, let's go rapidly fire. In one sentence, what will institutional liquidity in Southeast Asia actually look like over the next 12 months? So Sean, how do you think?
Sorry, can you repeat the question? Just blanked out for a second there.
Yeah, what will institutional liquidity in Southeast Asia actually look like over the next 12 months?
Yep, regulatory clarity is key. Southeast Asia needs three things. They need rules on clarity, consistency, and stability. They need to make sure that investor protection is there in order for them to attract long-term institutional liquidity. That needs to happen. But at the same time, balance for that is really crucial, right? An overly relaxed rule is only going to risk investor protection, is going to risk reputational issues. But an overly strict rule is going to, obviously make you less attractive to attract all these capital inflows. So I think countries that have done a really good job in maintaining this balance so far, from my opinion, I would put Singapore at the top, but due to the recent crypto clampdown, I'll just kind of like put them off the list. But I think that Thailand, Indonesia are really doing a good job in this space, and these are the two countries that I potentially see a lot of growth. So yeah, that's my opinion.
Yeah, so Sean has the three ideas. So how about Taka?
I think a lot of people, or central banks or and governments usually tend to follow the U.S. when they come out with like a new regulation sort of things. I think the Clarity Act in the U.S. will pave the way for market conduct. This is one piece of regulation that did not exist in crypto at all. And while we've regulated, service providers with their KYC, AML, etc., we have nobody has touched market conduct. And then if this has been implemented into all the Southeast Asian countries, I think that's when you can see financial institutions start to come in.
Yep. For me, same as Taka, right? But maybe I'll just focus on three countries, right? Japan, Korea, and Vietnam. Vietnam with the largest crypto adoption and DeFi trading volume. Korea, if institutions can finally allocate into crypto, it'll be a huge boost for liquidity. And Japan, right, as well, if, I don't know, they have any tax reforms on crypto allocations. And that's the reason why MetaPlanet in Japan is doing significantly better than any other crypto treasury place. So yeah, Japan, Korea, and Vietnam.
Yes. So thank you a lot for your sharing today. So thank you, Aldwin, Taka, and Sean Wong for sharing. And thank you so much for our audience for joining with us today. Enjoy the rest of the Conviction 2025. And let's keep building the next session. Thank you so much for your sharings.